All right. What is up, gang? I was going to make a super polished VVOS video over the weekend, but because this continues to just create so much controversy and confusion, and a lot of people are kind of really taking this out of line, I decided to just kind of YOLO improv it. So excuse me if this is unpolished, messy, some pauses, whatever, but I just want to get it out. And so this really somehow ended up being my most controversial tweet. And what I said was, today's move in VVOS is a textbook A+ easy money trade. Does not get easier than the $20 break. If you haven't playbooked these, well, shame on you, because the elite traders out there are. And I think that's the part that's getting the most misconstrued. In no way am I making fun of shorts that lost money on this. And in no way am I shaming people that didn't take this trade. Again, shame on you if you're not playbooking and studying these. I think that's a fair comment. These have been pretty big opportunities, these micro bio caps. I've been doing videos on them. I've been doing top ops. I've been including them in a zillion tweets. And these have offered some really big money. Not only have they offered big money, but some of these on the short side have been extremely dangerous. And I think the biggest example of that is VTGN, which kicked off a lot of this trend a couple months ago. So again, if you're someone that blew up short in this and you hadn't playbooked these and you hadn't studied the dangers and the risk, well, yeah, it is true. Shame on you. That's not what elite traders do. Elite traders do study these things and learn from their mistakes. And I think they're open-minded. So I will stand by that comment that this is the type of thing where if you're in this game, you need to be, and trading these tickers, you need to be playbooking them. It's not okay to have so many of these microcap bios rip. And if you're trading them and you're not databasing these, well, yeah, I'll stand by it. Shame on you. If that offends you, I'm sorry. And again, like, look, I feel bad if you lost money in this short. I feel bad for anyone that loses money. But that's the nature of this game. And if you don't evolve and learn, and if you don't have an open mind, it's hard to survive. You're not going to survive. But again, not calling anyone out here. In no way was this tweet malicious. But I think it was misconstrued as so. So if so, apologies, but nope. Shame on you if not doing the work. And that's fair. So, okay, let's jump to the VVOS daily chart, because that's where I think most things tend to start for me. And so what we have here is just like a yearly daily chart. And what you see is this ticker has a history of some epic moves. At the beginning of this year, I think it was something for their sleep apnea drug. Maybe they announced it on earnings. I don't really recall. I did look this up before, but I don't recall off my head. But yeah, so that's a huge data point where this thing has a history of, this went up from 10 to 70. So that's the first thing I'm thinking about on the daily is, wow, this thing has squeezed before. The other thing I want to point out while on this daily is look at that volume. This is the most volume this thing has ever done. Like, I am going back, I guess it doesn't have a ton of history, but I'm going back years, and this volume bar from the other day dwarfs everything. So the point being is, from a daily standpoint, like, this is breaking out of months of range. This has a history of squeezing, and it's also on that daily chart doing the most volume ever. So that's why I think that daily is so good and also so dangerous if you're trying to think short. Now let me jump into the good old intraday. Okay. So for starters, this is a low float stock, which makes this dangerous to be shorting. This is a microcap bio, which falls in the category of the stocks that have been super ripping. Again, I've tweeted lists of these stocks, VTGN, the RNAS, SGNX, I think was another one. The TPST, I did a video on that. That was a really similar chart. And so what happened is this had news pre-market. And so, oh good, my chart's actually on Eastern time. That's amazing, because I am definitely not on the East Coast right now. So yeah, I guess 7:30, this had the headline. We open up quite a bit. So right off the bat, this is already up from $5 to almost $13. So that's a big move. That's already got your attention that, wow, like, price doesn't mean so much for this thing. You kind of want to be careful. And so the other thing that's a factor for me is this is day one on the news, right? In general, I don't want to be super aggressive, let alone fading stuff with no stop on anything on just that's day one catalyst. So that alone can set you up for disaster. So now during the day, we're kind of flat off the open. And we make one leg. The way I view it is we go from 10 to like 1950. Somebody was nitpicking that I said 20 bucks rather than 1950. The highs were at 1950, okay? So yes, the tweet said 20, same thing. It's really the break of highs that is the true level. So I view this as one leg. Huge amount of volume is going off, right? And so now what we see here is we have a multi-hour consolidation. And so now the way I think of this move is really we went from $5 to almost 20 bucks, and now we're holding in the upper quartile of that range, certainly the upper third of that range. And we're also, I don't have VWAP on this chart, but we're also pretty much holding above VWAP as well. And so my general rules is for me to want to short something, it's really got to capitulate in both price and volume. And so even if we look here, nowhere is this capitulating in price and volume. We're not even really above the Bollinger Bands anywhere. The volume, if anything, is fading off on that move up to 20. So that's no capitulation. So that alone is going to keep me from, some of the shorts there. The other thing too is I've also mentioned that Trader Lion video. So that Trader Lion video, I talked about some of my rules to always be with the trend. And one of them is if it's holding above VWAP, I never want to be short. The exception being unless it capitulates. And so again, this hasn't capitulated anywhere. We are holding strong in that upper quartile, maybe even the upper third, and we're holding above VWAP. So for those reasons, nowhere in this range do I view this as a short. For me and my system, again, other people can differ. I'm just speaking for me. That's all I can speak for, right? I can't speak for anyone else. Now the beauty of this, right, is there are people probably shorting some of these fails. We try and roll over and everything else. Even here we dip. And so what this is telling me is with all this float turnover, right? Like again, imagine if you didn't know the prices of this stock. What do we have here if you remove your biases? We have something on day one news. We have something that made a pretty steady, strong leg, right? Then we're holding that leg on insane all-time high volume and we're consolidating for hours. This really is no different than, say, the ARM IPO, right? The ARM IPO made a super strong leg off the open. We kind of sucked some of the shorts in where it looks like we're going to roll over in places. But at the end of the day, we really hold up. Then we quickly start to rip up towards highs. And so some of the other variables that I really, really like is how huge that R-vol increases into this move, right? We hadn't really been doing much. And so what happens is you get all these people that were shorting over the course of these hours, right? People are shorting, especially when we start to turn down, especially when we drop a little bit. And the shorts are getting no ground. They're making no ground. And that gets scary, especially as you start to head into the end of the day. If that isn't collapsing, who the hell wants to hold this thing overnight? Especially with borrow, especially with fear of no locate. You do not want to hold this overnight. So a lot of people that are positioned short, especially if they're positioned short for size, that gets super, super scary. So one thing I want to discuss about this is a lot of people commented about the percent up it was, and they thought it's asinine that I would ever consider buying something up hundreds of percent. So this is actually a super important point. Those percents mean literally nothing to me. You want to know the type of stock. So this stock, when this broke out, this ended up going over 100%. You want to know the type of stocks that break out and go over 100%? It's not the stock up 1% on the day. It's not Ford up 3%. It's not Apple up 2%. Those stocks are not going to break out and go 150% higher, right? You want to know the stocks that are going to go 150% higher and have that asymmetry? It's the stocks that are already making big moves, that are the low floats, that are the micro caps, that are doing huge volume. So the beauty of this is when you're with the trend, especially on stuff that's already making a big move, that opens you up to massive asymmetry. So now as far as these other nuances, and this one is huge, right? What people really miss is the other beauty of this trade is it's only had one leg off the open, right? All we did was go during the trading day, we went from essentially 10 to 20. Then we consolidated the whole day. So it's only made one leg during the trading day. Then the rest is all consolidation. Boom. Then we break out. So when so many people are getting caught in these false breakouts or everything else, it's because something's gone many, many legs, or it hasn't consolidated enough, or it isn't day one, or it doesn't have a nice daily, or it isn't doing massive, massive volume turnover. So again, if you're going back and looking at charts and you're like, oh man, I got caught up in this false breakout or this or that, if you're going to tell me, Lance, you're wrong, I want you to go through and find the data points that match everything I said, right? So day one news catalyst, microcap, biotech, low float, while these tickers and while these have been super in play, for the last 2 months, this has been the most in play trade, and I have been tweeting about that, right? And then you take this beautiful consolidation where you hold in the upper third, and then you take a stock doing the most volume it has ever done. Find me those nuances, backtest that, then talk to me, right? But if you're gonna just say, oh, this is washout, this is dumb, you're buying too, and you're gonna talk all the trash, then get the data to back it up. And so the only person I've seen actually provide data is Lucas, but I'm gonna get to that in a little bit. So let's see. The other thing I want to touch on, and yes, I'm using notes. I know people will flame me on that too. I'm improv here, folks. Work with me. The other thing I want to touch on is the most common pattern, I think, in markets for stuff that's in play is something makes an opening drive, something then consolidates during the midday, then something makes an afternoon breakout, and then a second leg. That is probably the most textbook continuation pattern there is. The odds of that is actually kind of more of a base case when something is trending with news, right? So it's like, in my head, I know people think this is hindsight, but what this intraday was doing, I can't magically, well, actually, maybe I can cover it up. Yeah, so, here we go. So if I cover up the right side of this chart, this to me is a beautiful A+ intraday, right? I don't need to see the outcome. So many people were saying hindsight. But again, if you just show me this chart and these characteristics and you tell me all the things I just went over, I will tell you that this is a beautiful breakout right there. I don't need to know the outcome. If you told me that this thing ended up failing, I still would have said that this is a beautiful breakout because of all the nuances we went over. In fact, in TPST, when I did my TikTok video, I identified a very similar breakout to this as being beautiful. Then the one right after it, it ended up working. And even though it worked, I said in the video, like, look, this breakout worked. Even though it worked, I still view this as bad because it didn't consolidate enough, nor was the consolidation tight enough. So that stuff is like, I think my evidence that I don't really hindsight this, right? This is just beautiful, right? We started, right? This is kind of the lows there, a little bit of a higher low, higher low, higher low. Then this kind of just jukes people and sucks people in, right? Then all those people get taken to the cleaners. Okay, so let's see. That's important. Let's see. So the other thing I want to touch on as far as nuances, and this also came up when I did the MULN video, is that these details really do matter, especially when it's day one, right? Like a lot of people with MULN, they were afraid of an offering. And they say, oh man, all these dilutive ones always have offerings. That's true. Dilutive stocks do tend to have offerings. But how often does it have it on day one, right? Most people don't factor that. And especially like they don't factor that in the conjunction of the most important part, what happens with the expected value? So a lot of people like Lucas and like Nate, they brought up the point that you can get caught in a flush lower. So let's discuss that bad case scenario. This kind of breaks the highs. What happens if you get caught? So first of all, because of all the nuances discussed, I think my lens of the probabilities of this just kind of being a fake breakout is far lower. But nevertheless, let's even touch on this and say, okay, let's say it's a false breakout. We broke above 1950. Like, the reality is like, even if this gaps down a couple points, like I would say the odds of this being a false breakout and really washing down, like as far as you losing meaningful risk, I would say it's maybe a 10% chance you lose 3 or 4 points. So again, like I'm not saying this can't wash out. It definitely can. But I think much like, let's take even the banking crisis in March. I think people like Lucas and Nate were afraid of the halt risk. And so let me also clarify by this. People think there's some like massive feud going on between Lucas and myself, or even Nate and myself, which is funny because Lucas and Nate and I were all just WhatsApping each other laughing over this whole thing. None of their posts are directed at me. None of my posts are directed at them. And even when I'm using them as an example now, and I'm especially going to use Lucas as an example because of the back testing, the point is just simply that there's different viewpoints out there in the market, and that's okay, right? Like Lucas is exceptional, Nate's exceptional. It's okay for us to all have different views. That's the beauty of markets, is there's different ways. So when I say this stuff, it's not because it's like, oh, I'm in some feud with any of these people. We're all really close friends. You know, it's all that narrative has also been pretty funny to me. But back with the banking crisis, people were afraid of halt risk and stuff like, I think the ticker was WAL. And so that was a common fear even at SMB when that ticker was bouncing. And it is a valid fear, right? But the most important part back then was you need to handicap that fear. And when I got in the trading room and met with those traders and I said, hey guys, how would you handicap the risk of that? And we started plugging it into the expected value equation. That's when people realized, wow, I'm tending to overweight the most scary fat tail risk. But nevertheless, if you actually ascribe probabilities to it, it works out. And so that's what I want to do here. It's not that this can't flush out, but given the nuances, I would say, okay, look, let's say there's maybe a 10 to 20% chance that this does somehow get you. Like, I personally think that even if this did kind of fail, first of all, I think a lot of times, like fail hard, a lot of times you're going to be able to get some liquidity if you're fast. And if you're not fast, hey, guess what? That's something we can work on. But even if this does really stuff you, I don't think, like, again, the nuances matter. When this is consolidated so long, man, to think that you're not even getting out by 15, like, I think that's kind of hard to believe. So even if we call it $16, which again, I don't think that's that likely at all. I think 16 is maybe like a 5% chance. But even if we call it 10 to 20% chance, that's fine. That's like a $3.5, $4 loss. Okay, not that big of a deal. So what I do want to point out is, so no, based on my system, a lot of people were asking what's my stop for this as far as capturing this. So no, in no way am I probably capturing this whole move. Like, to be clear, nor did I ever say like, yeah, I don't think I ever made that point anyways. But what I do tend to do is use 2-minute bar lows as the trailing stop. So that would have got me out, I think, at around $25, right? So that ends up being over a $5 gain. So I actually think the odds of that making the $5 is probably like, man, I think that's a super reasonable win, honestly. I don't even think that's that crazy, because this, usually I look for a symmetric move, and so this leg went from $10 to $20. My base case is that this can go from 20 to 30, right? So I would have got stopped out earlier at $5, but I really think there's quite a probability that I could have made $10, and I do think there's also the possibility that this could have halted very early on and mega squeezed with me still in it. So for that point, like, when you're with the trend, like, especially on stuff that are known black swan risks, being short these things, again, like VTGN, like, so if you're calling this like a black swan, this was not a black swan, guys. Like that is just ignorance and you not doing your homework, because VTGN did the same thing 2 months ago. There's been so many stocks that have been doing this lately. So again, when I say shame on you for not doing the homework, if you're calling this black swan, oh my God, couldn't have seen it coming. Well, guess what? Like, you know, that's on you for not knowing that microcaps do this, especially in a good setup. And the other point I want to make with this is, like, when you have an A plus setup, which I consider this intraday, like most, like it's not uncommon for something to really black swan with you in it when you're with the trend like that. Like I don't want to say that this going to 50 is some super base case scenario, but like I do think 30 was a base case given the consolidation. But you're opening yourself up to positive skew, which is super, super important. And vice versa. If you're short that, you're opening yourself up to all that negative skew. And again, I see no reason to be short in that consolidation. This isn't hindsight, guys. I have said this in so many presentations. I've said this in the Trader Line video. I've said it in so many other videos. My system would have kept me out of that with rules that I have publicly tweeted and discussed so many times, you know? So let's see, what else do I want to touch here? So I think like for a lot of people, again, like I'm not saying I'm catching the whole move by any means, but I do think when you start to do this math, like if you catch even what I would say this was a pretty bad case win where you only made 5. But again, that $5 more than covers the chance that this washes you out to 15. Like even if we take basic odds and say, okay, the base case was a $5 win, I would still say the odds of a win here is 3 to 1, the odds of the flush out loss. Like even if we way simplify, and that is a hell of a trade. And no, I'm not saying take on huge size. Like I think that's also where things got conflated. People like Lucas is a massive trader, but you don't always need big size, right? There's nothing wrong with trading a couple thousand shares. And if you're not a Lucas, which is probably 99.99999% of the world, there's nothing wrong with a couple hundred shares there, guys. Like we don't need huge positions that we can't get out of. People in my pods were trading a couple hundred shares, 500 shares, 1,500 shares, couple thousand shares. Like that's great. So one thing I do want to touch on is where would I have shorted this, if anywhere? So again, I need, the other thing too is like this volume is incredible here too. Because keep in mind, we're over 2 to 3x higher in price now. So the dollar weighted volume is actually much higher. So again, I need a capitulation in price and volume. Here's probably the only spot I'd consider where we're starting to really escape that upper Bollinger. This stuff does start to get scary. As always, I wait for the right side of the V and the break of prior bar lows. So that would get you, I don't know, shorting here, but then still stopped out here. But again, this isn't something that really interests me to short so much because for all the reasons already discussed, it's just day one and it's the highest volume ever and everything else. Like, and it's scary. You can so get stuck in a limit in these that could really just, we saw, I don't recall what the ticker was earlier in the week. God, it was like the $8 ticker, $12 ticker that then opened at 22 and was indicating 80. Don't remember what it is. I'm sure you guys do, but I'm trying to improv this. So yeah, that's the only place I would short is after the turn, and then I'd get stopped out anyways. But again, for all the reasons, it's really hard to convince me to want to short this so much. Okay, what other points do I want to hit? So proper entry and exit. So again, yes, my tweet said $20, but it's really just the break of prior bar highs. So this is another important part. So people were talking about how quickly that swiped to highs and then halted. So it's super important to recognize that the absolute best trades will do that. The best trades just explode and immediately go in your favor. That's why it's so important to have a stop on this stuff. And especially in a stock like this that can get thin and has super high black swan risk, you need to have a stop in this and you need to have a proper offset. That is so important, especially if you're short. Oh my God, you cannot risk getting stuck into that halt. You need that stop there and you need a huge offset. And if you are stuck in this, man, oh man, like you need to get out when that opens. Like if you are past your stop, you need to get out. This is like danger Will Robinson. You are not short SPY. You are not short Apple. You are not short Ford. You are like, this ticker was the riskiest ticker probably in the market. You do not want to not have a stop with that. I'm sorry if that's offensive to people. Like, I'm sorry if you are hurt by that and your feelings are hurt, but this is trading and this is part of getting better. Like, you need to have tough love, and the market taught you that. And again, that's not my fault, and I'm trying to help you improve. If you get stuck in that halt, you need to get the fuck out of that and pray to God that you see another day, because this is so risky, being short a microcap biotech after an A+ consolidation when it breaks. No, that will never ever be my fault. That is you. So the other thing I touched on is how to find these types of trades. So I posted 2 filters. It sounds super, super dumb and silly, but it's true. You really just, I was always running what's up the most percent, sorted by percent versus the prior day close, and what's doing the most volume versus its average daily volume. So this stock would have appeared on both of those filters and at the absolute number 1 on both of those filters. It is a very good catch-all to always be looking at those and typing those up, especially when low floats are moving. Those are very simple, easy things that every trader should have if you are involved in stuff like this. The other thing I want to touch now is jumping to some of this Twitter stuff. Was this the first tweet? Okay, this is the first tweet. So let's get into some of the Lucas stuff. Again, Lucas and I, we are very, very, very good friends. There is no feud going on. I highly respect his opinion. He is probably, I think it's safe to say, he is the best trader I know. Out of all the big traders, he is the absolute best. Lucas is better than me. I think he has the best track record. I think he is the best work ethic. I think he has the best drive and the best diligence. So again, there is no feud here. I have nothing but infinite respect for Brother Bear. But I do have a different view, and like, that's totally fine. We have tons of views, different views all the time. Again, there's no hate here. There's nothing but love. I know as a fact Lucas feels the same way. So his first point was last 10 instances of expectancy greater than this one outlier. Some of this is hindsighting. You can take this trade long, lose 90% of the time. Then, of course, people proceed to flame me. But now this is the most important part. So I then commented that, look, Lucas and I can both be right. Lucas is doing what's right for him, and I can do what's right for me. And there isn't really anything wrong with that. Not everyone has the same system, right? Somebody can sell to Warren Buffett, but that doesn't mean that person is wrong, right? If I sell Bank of America to Warren Buffett, and also RIP Charlie Munger, man, what a fucking legend. That was really upsetting. But not to get off track, if I sell Bank of America to Warren Buffett and he buys it from me, but that tax loss is super advantageous to me, or if I'm buying something that I think is going to perform better than Bank of America, that doesn't mean I did something wrong, right? That means I did what was right for me in my analysis, and Warren did what was right for him. So if Brother Bear is Warren and I'm the random schmuck that is taking the other side of him, so be it. You know, it's totally fine to do that, right? Nobody on Twitter is right all the time, right? Lucas is just sharing his opinion, I'm sharing mine. Like, it's so important to take anything with a grain of salt and to just think objectively for yourself, to observe and to be open-minded, right? And I made that post about being open-minded because that's how you learn, right? I want to hear Lucas's opinion. I want to DM him and side chat him and debate. Okay, so let's dive into Brother Bear's back testing. So he was looking for a similar gap up and similar intraday run, starting with VVOS. And so he pretty much gives his criteria, right? Gapped up VVOS was 175%. He's adding a volume filter to filter out the bad apples, and so on and so on. And he essentially finds 18 tickers, right? And so let me say this. So Lucas does a lot of back testing. Backtesting gives Lucas conviction, it gives him edge, it gives him data to know how to hold, how to enter, how far things tend to revert. And that is something that's unique to Lucas and differs from me, right? It provides him edge, right? And that is fantastic for him. I tend to not use a lot of backtesting. I'll explain why. and what I view the limitations of backtesting and how that diverges, and why that leads to a diversion in our views and why we can both be right, right? So Lucas ends up finding all these charts. And so the point I want to make on some of this, though, and which is really going to be the number one limit of backtesting for stock charts, is you can do the criteria that Lucas is doing, but at the end of the day, the way I trade is really using a lens for technical analysis, like all the nuances that I factored. And so what you really need to do for a proper backtest is you would really need day one news, you would need a microcap biotech with the low float, you would need to make sure these tickers are doing the most volume they have ever done, and you would also need to filter for things that have only made one leg. You would need to filter for things that have beautiful, perfectly clean consolidation. You would need to filter for things that are holding in their upper quartile. And so if we start to look at these charts, what you find is that yes, on a broad scope, big picture data perspective for how he backtested these, like it's not that, like Lucas's final conclusion was that this was inconclusive. But I would say, like, part of the beauty of what I do and my strength, whereas Lucas's strength is collecting data and doing this backtesting, mine is just having a lens for price action and the nuances, right? And so what do I mean by that? So the best example I can give is in 2022, CPI started to become super in play because of the fears of inflation. Now, guess what? What happens if you go back in history and look at the prior, the prior 100 CPI data points prior to 2022? Because there was no fear of inflation and we were in a low inflation world for over a decade, if you look at CPI for that decade, it was totally meaningless, right? It never ever moved the market. So when CPI did start moving the market, there is no way to backtest that, right? We were never in that market environment. You can try to find stuff from past eras and everything else, but it will never be exactly the same because, again, we're going from a decade of 0% rates to higher rates. That had never ever happened before. There is no comparable. So you can do approximate backtests, but again, it's not the same as the present, right? There are limitations to these backtests. I think Lucas will openly admit that, right? I think anyone would admit that. There's limitations to backtesting. So me and my style of just trading on a technical lens and these nuances, like I was able, and the people I mentor, the pods, everything, like we were able to adapt and attack CPI super quick because we knew this had become in play. And so with all these details here, what's so missing in the backtest is none of them also replicate the fact of just how in play these microcap biotechs have been recently, right? There is no comparable to what does the data say to this specific chart with these nuances after a VTGN, after a TPST, after an RNAS, because that is only true in the present, right? And so when you don't have perfect backtesting data, that's what creates edge for me, right? There is no comparable. So the Lucases of the world, for him, this might be a negative expected value play, right? If you're trading these 18 plays or whatever the tickers are, that might say, okay, based on this study, VVOS does not have edge. But what that really is saying is VVOS does not have edge for Lucas and his system. And again, that's fine. Lucas has edge a million other places. We all would love to have Lucas's edge. But what my tweet said was, or at least implied, people don't explicitly say this, but this was an easy money trade for me. This was an easy money trade based on the principles I've been tweeting about. This is an easy money trade based on the tweets and videos I've been doing. And this was an easy money trade for those in my pod. And look, I know people are calling hindsight, but there are so many people in SMB that had the same scans that I'm sharing with you all. They've been following the videos. I've been talking about these in meetings. These traders are capturing these trades. So that is why Lucas and I can have a different opinion. That's why Nate and I can have a different opinion, right? Because we're different traders with different views of making the market. And I would argue that's what's so beautiful about the stock market, right? Lucas can be the epic goat with his things. I can be I don't know, I think I'm a pretty good trader, or at least had a good career. Doing my things, I think Nate is a pretty good trader, and Nate does his own thing, right? And that's the beauty of it. And so, look, there is no Lucas is wrong, Lance is wrong. It's just we're both presenting our opinions and our viewpoints for you all to learn from, and it's so important to be open-minded to these. I know people are saying like, oh, you're just being open-minded because you're wrong, Lance. But it's like, no, it's important for everyone to learn. And I've learned more from Lucas. I've learned more from Nate. And it causes me to test my assumptions. I stand by my assumptions, but again, that's because we're from a different lens. So now the other thing I want to touch on too is the question of Lance, why don't you post your executions? Why don't you post your P&L? So I will never ever post P&L. I will never ever post executions. And there's a zillion reasons for why, not the least of which is you're damned if you do, you're damned if you don't. And most of all, I'm just trying to make a learning point, right? Like the trade shouldn't really be based on the outcome. It shouldn't be based on whether any one person or any people made money in it, right? Let's say I never trade ever again, and I never trade a single setup. That doesn't mean what I'm teaching doesn't have validity. That doesn't mean that what I'm teaching doesn't have stuff for people to learn. The whole point of teaching is for people to independently analyze what I say as right or wrong, right? Again, unlike most people, I'm not selling a product. I have nothing to prove. I'm just trying to freely educate. If you don't want to follow, I don't care, right? Whatever, who cares? But like the thing is, especially on the prop side with SMB, it's particularly hard to publish just executions for a lot of reasons, right? And like the other thing too that I would say is like, anytime I have even tried to do something like that, you inevitably just get shat on by people anyways, where like, you know, one of the people that was hating on me for the tweet and not posting this stuff, like there's also people that hate on me when I do want to, like I had the idea to post my options trades, right? Which are kind of less regulated on the prop side and everything else. And it's like, people shat on that idea too, right? And it's like, if you post a win, it's like, oh my God, oh, wow, he's bragging when, you know, read the room, no class. So it's like, no matter what, there's going to be people pissed off. And it's like, at the end of the day, it's just free content, guys. Like, you know, like, yes, I had exposure to this. Like, yes, people at SMB were actually taking this trade. Like, no, I'm not going to post my executions. I'm not going to post their executions. Like, this will never, ever, ever happen. It's something I'll just never do. You know, if people want to unfollow, whatever. So let's see. I think I got all the main points. So like, look, I guess to really wrap up this whole thing, which has probably gone on way too long, not everyone needs to agree. I did not mean this in a malicious way, but I do stand by that for me and my system and the things that I've been teaching and openly sharing and freely sharing, I do think this was an A+ opportunity. I do think this was not hindsight. Why do I know that? Because all the people I'm mentoring and teaching, they were setting up scanners and they caught this. Like, you know, it's, again, I don't want to name their names. I don't want to name their P&Ls. Oh, the other thing I will say is like, look, I don't know anyone that crushed this. I don't know anyone that caught that whole move. And like, that's not really what I'm saying, nor did I ever say that, right? One other thing actually that I did forget to add is a lot of this stuff works on different time frames. And I don't know his details, but I do know that like what Christian Qualamagi does on some of these daily charts, like this is the same type of setup that he does on daily charts as an intraday chart. And even on this news gap up, this actually qualified as one of his EPs, this whole pivot plays, right? And this was something where if you're traders for a cause, like he discussed exactly this play and being long this play. And again, I can't speak to what he did, but he probably was long this. And I don't think he probably had a reason to sell until past $20 because it hadn't capitulated, right? And if you listen to his talks, he discussed those rules. So it's one of those things where it's like, look, you know, I don't know why this caused so much controversy. Again, like I think if you even just honestly, objectively look at my original tweet, I wasn't shaming anyone for blowing up or not trading this. It was just like, look, guys, if you're a pro trader, it's so important to do the work. And I think doing the work means doing the back testing like Short Bear did. I think doing the work means finding all the comparables and posting them like I did, dissecting all those trades, databasing those trades. One thing that I will say is for all the people that supposedly blew up on this, I have not seen a single person do a detailed write-up dissecting their loss with solutions on how to improve and how they fell for this and why they didn't have all these comparables beforehand. I've seen some people write it up, but guess what? All the people that did the write-ups are the people that follow my work and like we're fairly on top of this and are aware of this and we're open-minded. For all the people flaming it, I've not seen anyone that blow up do a really good multi-page detailed write-up. You want to know who's doing, I don't know how long this video ended up being, but you want to know who's the only person dissecting this for 40 minutes? It's me, right? So, you know, all the people that are so butthurt and upset that like by my tweet that I thought this was an easy long, well, again, if you haven't done that work and if you haven't done the deep dive to fix your thing, like, look, I don't want anyone to lose or be hurt, but that's what this game is. You need to evolve and you need to be open-minded and we need to learn. And I'm sorry this couldn't be more polished. I'm sorry this probably went on so long, but this was important for me to get out because there's just so much misinfo and confusion and it takes a lot of time to clarify. So thank you all. If any of you followed along this long, thank you. Happy to answer questions. Appreciate it. And keep on improving your game. Keep on studying.